All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's up a little bit here this morning, 0.4%. Just kind of opening up and drifting on higher, led by tech. We're seeing some positive news out of Google, some decent earnings out of Twitter, Amazon helping to push higher. We still see the Microsofts and the Adobes of the world, pushing on higher. So kind of helping here in that. You can see Adobe, which has just been kind of putzing around this 270 area now for weeks, getting a fresh breakout into a new high here today. So a very strong move there for Adobe. You look at some of the technical indicators, the MACD, the stochastics, they're in very nice positions. And, if you're bullish in this market, you look and you go, okay, you know what? Haven't had a pullback, but a little consolidation of the gains and now pushing. Hey, that's positive. And we see a lot of that out there here today, and a lot of that kind of breaking to the upside here today. Microsoft did it starting last week, and it's just kind of continued on this torrid pace here, blowing up into the 120 area. And I saw yesterday Microsoft was used as an example of why this market is so overcooked and why this is 1999 all over again. I didn't really buy the argument. Microsoft today and in 1999, completely different companies and completely different market environment. And the reality is there's earnings and there's revenues driving these moves. This isn't a move without earnings and revenue. This isn't just this kind of euphoric, hey, you know what, just buy anything because anything's going to go up. There's still plenty of differentiation out there. And companies with earnings, companies with revenues continue to get bought up. We continue to see that. And we're seeing that here this morning. This isn't a market open here this morning where companies without strong revenues are getting bought. We are seeing the strong earners, strong revenues. They're the ones that are up, and the others are just kind of sitting there, just kind of stalling out a little bit here on the day, and just not really getting that that same charge in it. So highly differential, definitely favors the bulls. And, continues to kind of, show that, hey, you know what? Yes, the market may not be going anywhere overall, but the bulls still have, a few more advantages than the bears do. And I think it's very clear. Just look down this board of mine, and in no way is this board comprehensive. But if you look at what's red and you look at what's green, right? Generally, what's green is a lot greener than what's red is red, right? What do I mean by that? Well, the stocks that are up, they're just up more than the stocks that are down, right? If we come into let's just come in here to Index Watch, and we'll take a look at the S&P 500. You can see there are 322 advancers and 179 decliners, right? So there are plenty of stocks that are down on the day. But if you look at the gainers, the bigger moves, they tend to be in the green, right? They tend to be on the upside. A few small exceptions, there was some chemicals, but the stocks that are up the most or making the biggest change on the day, they tend to be the stocks that are in the green. Waters Corp, a little bit of an exception, but other than that, we're seeing that across the board here today, and that's generally bullish, and it's nothing we haven't been seeing, but overall the S&P fighting up into the new highs. In fact, it's here. Let me pull it back to an hour chart. You can see it broke into a new high. It broke the high from what was it, last Tuesday, where we saw that kind of market reversal last Tuesday. So broke the high briefly. Is pulling back just slightly off of it. but we're talking about a 30-point range on the market in the last week and a half, and prior to that was a 30-point range for the prior week and a half. We're talking about a market that just on aggregate isn't really going anywhere. Now, yesterday I was asked about small caps, and we talked about how they were lagging over time. There's a counter to that, right? Meaning, what do you mean? Well, when we see the Qs, right, they're leading here, right? And it's one of those things where, when we talk about small cap underperformance, yeah, that's generally something you see ahead of a big bad sell-off, but it's not the only thing, right? In and of itself, there are other factors out there in the market, and one of the more bullish factors is the fact that while the S&P is consolidating or just kind of, barely pushing into a new high, every other day we see tech push into a new high. We see the NASDAQ pushing into a new high, and that has been a consistent here in this market. All right, now the challenge test. I hear this morning there are no entry triggers, and yeah, it's one of those where one of my biggest concerns with the algorithm and dealing with this over the last several years is what to do in these periods where there aren't any new signals. And can I expand the watch list, right? Because there are stocks outside of this watch list that are creating signals, right? So do I go and do I expand the watch list? If I do that, then I'm dealing with some companies that the options aren't as good, or I'm in those other trades while as these are starting to trigger, and I don't get the opportunity to play them, or do I be patient around it? And I've chosen I'm going to be patient around it and continue to run with it. It does over time balance out. But the last 3.5 weeks, we've seen the market flatter than it has been since any period since 2016, right? And so yes, it is something that happens, and we see it happening, right here, right now. Now, Netflix was very close to triggering yesterday on the call side, and ultimately it didn't because it was up too much. That's not necessarily a bearish thing, but that is that's a positive there. There are some things that could trigger by this afternoon. Under Armour is one of them that could trigger here by this afternoon. Twitter could also trigger by this afternoon. Now, this has kind of that same issue that Netflix had yesterday, where it's up 15% on the day. Is there really follow-through potential here on it? And with Twitter, when the algorithm goes back and looks at the gaps up, right, it's one that when it has these gaps up, it tends to have a little bit more follow through to it than with the gap, than does a Netflix. But that could trigger by the end of the day. I suspect we would need to see some pullback into the close, in order to see it trigger. But what's interesting is, there's some upside triggers or potential, there. Most of the stuff on the watch list, it's kind of like an Apple. It's we talked about it yesterday. It's kind of in this trend mode. Can you buy it? Yeah, you could buy it, stop on today's low, and go and run with it. And it is something that we could go and do for the challenge. We could go and buy an Apple and just run with it with the ATR method, right? And that is something that is on the table. Could possibly do in these times where there's not a lot of triggers. I'm not going to do it here in this test period, but that is definitely viable and on the table. Now, what was most interesting to me is I got the scan report, scan results, was the fact that 6 stocks on the watch list all had a similar look to it. What is that? Well, here's FCX. FCX has a 3-7 cross down to it, right? which, is a precursor for the algorithm. It is something the algorithm needs. It doesn't have to have it, but 90% of the stocks are going to have it. But it's this element of downside 3-7 crossover, but stochastics 39.1, which we've kind of talked about. If it's above 50, we're going to have a hard time getting a bear signal. There's a lot of that, where you have the 3.9 crossover to the downside, but you have the stochastics above 50 here. FCX, General Motors, same position. Same element here. Halliburton, same position, same above 50 on the Stowe, and 3-7 downside crossover. Procter and Gamble, on its earnings here this morning, which were pretty good earnings. But one of the things I mentioned yesterday was very interesting to see how these stocks that were very full in terms of their valuations, how they performed when we saw earnings. Target. Also has the same thing. UPS with the same thing. So this kind of downside 3-7 crossover with the Stowe, with it kind of what's it mean near new highs. So, these stocks are trading near their kind of multi-month highs. But you know what? And they're getting that 3-7 downside crossover, but the probability of downside trend is limited, based on the other factors that we see. So now there are some things out there with that kind of trigger, that downside trigger, but don't have a high probability of success when you start to, put in a lot of the other factors. Now, if some of these things like an FCX, if we're talking about a lower high coming in, and something of that nature starting to to come in, then we would be much closer to a signal. But we'd need to see some sort of rebound, some sort of rally for that to happen. But that was a commonality on the list here this morning, and something I found to be quite interesting. We also have stocks like Visa, MasterCard. We have a industry conference here today. These industry conferences, they can tend to be turning points for these types of stocks. Either some blow off the tops or some sort of downside reversals, depending on what's said. I do think it's worth keeping an eye on, how that goes throughout the course of the day here. And I think there may be some very interesting entries, here this afternoon. But MasterCard and Visa. So, for the challenge test, there's nothing for me to do right here. Nothing for me to trade right here at this moment. Now, excuse me. Now, we had a whole bunch of stocks or companies that reported earnings, right? And Twitter reported earnings here this morning. Take a look at the earnings beat. 37 cents versus Wall Street consensus of 15 cents. I mean, that's a monster beat, right? It's just an absolute monster beat there on a percentage basis. And the revenues beat, right? Which I think is probably the bigger story, is seeing the revenues beat. But it's still a company that has this strong revenue projection to the upside. It's a great it's a great report for Twitter and for the Twitter bulls, and something that suggests that Twitter has significant more upside. We've seen Twitter beats before, right? And we've seen them come in with these kind of big beats over the last couple quarters. But if you take a look at the reaction over the last several quarters, it's not always been that positive. I mean, last quarter, Twitter gapped down on a big revenue and a big earnings beat. Back here, it gapped up on a big revenue, big earnings beat, but not a ton of follow through here. But we now have Twitter that's kind of been in this consolidation area since the July earnings. And it's been in this consolidation area for 9 months, and now getting a big gap up, breaking that, breaking out of that consolidation. That's a very bullish from a price action standpoint. It's very bullish from an earnings standpoint here for Twitter. Definitely one that path of least resistance is going to be to the upside, and one where pullbacks are going to be very, viable or very buyable as we go forward. So very bullish report here from Twitter, and it really kind of, if you look at what the Bears argument is in the market of earnings and revenues falling off, they're going to sweep Twitter under the rug and say, well, who cares about Twitter, right? But, Twitter is a huge number here today. We also had UTX, United Technologies, and UTX beat on the earnings. Right, beat on the earnings. This is now, they have consistently beat on the earnings over the last year. They've been very good with that, and beat on the revenue, right? They're beating on the revenue expectations. They're growing revenues. It's a great story, and if you look at the industrials, and you look at some of the best stories in industrials, you compare this to Honeywell's report. Honeywell's report was okay. It was good. And it had a very favorable reaction, but we talked about it on that day. Its valuations are pretty full. UTX, their valuations aren't as full. And I think you could argue it's an even better report here out of UTX. So, nothing for the Bears in either of these reports. In fact, it's one where, the Bears kind of look at them and go, "Ooh, wow." Do we have to reassess any sort of bearish type of, outlook? Now, Verizon also reported here this morning. You can see they beat on their earnings per share expectations and barely beat on their revenue. But you can see that, year over year, revenue up and everything else. This is one of those like Procter & Gamble. I said, it's probably not going to be a big earnings beat or miss or something like that. But, Verizon, Procter & Gamble, their valuations are very full. How does the market react here to them? And I think it's the appropriate reaction, and it's a reaction that likely has some follow-through here to it as, okay, you know what, fine, they came in with their numbers, nothing too explosive, nothing too exciting. If investors want explosive and exciting, there are other areas to go look at. We've just talked about two of them, and so we could very easily see a Verizon path the least resistance back down to the 200-day moving average, and Procter and Gamble something very similar, albeit, I wouldn't expect to move right back to the 200-day moving average here, but some sort of 2 to 3 week, just kind of, drifting pullback, depending on the market. If the market has a pullback, then, they probably lag. If the market continues to go up, they're just going to kind of slowly drift on down without a whole lot of bite to that sell. But very logical reactions, and I don't think you can look at Verizon and make a big bad bearish argument for the market or anything like that. I think this just kind of goes and continues on this theme that we're seeing setting up this earnings season, and that is that it's a pretty darn good one in terms of it's not giving the Bears anything. It's not giving the Bears anything. Yes, we talked about where the revenue numbers are, the 5% lowest since 2016, but that was also known kind of going into the season. It's not getting worse, right? In fact, I think if we were to take a look at what the aggregate is now, given some of the earnings beats we've seen already this week, that probably goes up. And so a very bullish earnings set, here this morning. Are there exceptions? Yeah, you come in, you look at some of the smaller companies, and who is it? Let's go take a look at Harley Davidson here, Hog. They're trading down here this morning. You can see they beat on earnings, and their revenues here, though, missed, right? So, another revenue miss here out of Harley, but the market cap for Harley is pretty small. It's a very kind of niche product and something where how's it doing in India and all that matters. It's not something that speaks volumes to the market, and it's not something the Bears can look at and say, well, see, Harley, that's a negative, right? Polaris, I think you can find a few negatives in some of their numbers, But when you listen to their CEO, you listen to some of the stuff that's been said about what's going on with the business trend. It's a buy all the way around. It's a really good emerging fundamental story. So I go back to what Honeywell said last week, where they said, "Look, this market, it's hard to be a buyer because of where valuations are. Valuations are so kind of uncertain. And for a lot of companies, we're talking about valuations that are 2007 type valuations, stock market high type of valuations, right? But when you look at how the earnings and the revenue trends are going right now, those valuations are justified, right? And those valuations could get richer. And so far, that's what the earnings season suggests. It suggests those valuations are going to get richer. Now, we're going to have a day where, a bunch of companies report and, there's some flaws, right? There's some flaws. You look at this morning, not a lot of flaws. And you see how the market's reacting, and it's reacting in a very kind of just, logical, bullish manner, not too hot, not just blowing things out, but very just kind of logical, bullish manner. How does the market react when we have an earnings day where, 3-4 big companies, have some flaws, have some misses? Do we see a much bigger downside reaction on that than we get an upside reaction on, a day like today where it's very solid? I think that'll be interesting to see. And if we see that, I think we could talk about potentially something game-changing. But that's what the Bears would need, and the Bears need a lot of ifs. A heck of a lot of ifs, and so far no sign of anything really kind of switching, here in the market. Okay, so anyway, that's kind of where things are here this morning. How things sit, from an earnings and from a challenge test standpoint, and we'll continue to run with that. No, I will jump on video. Going today to talk about the test trade tabs up here. What each one of these tabs means specifically, but give me a little bit. I didn't get a chance this morning to prep, everything that I wanted to. So with the earnings and going through those, so want to do a little bit more prep here for that, and then we'll jump on and talk about it. And the link for it will be added here into the spreadsheet as well. The link for the spreadsheet will also be added to chat here today as well, and we'll go from there. So hopefully, I'm expecting about 1 o'clock Eastern, when I'll jump on and talk about what's going on here with these various categories. Thanks for hopping on. We'll talk to you later. Take care.